Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So the melt up continues today, Thursday, the 14th of May, and this market is bid again up 0.79% on the day. It's crazy. In the past 2 days, we've been melting up without no pullback, absolutely zero pullback. This is the mother of all short squeezes. Okay, we are at new highs. That is the thing, new highs. And should we be cautious? Okay, we're going to get into my thoughts on this in the main event. First, let's talk about the technical picture. We always talk about that, guys. Bullish. We don't have to talk about it any longer. Okay, bullish. It's still there. Rocket ship to the skies. If anybody tells you this is bearish, something's wrong. Okay, so this is technically speaking a bullish pattern. Okay, let's look at the sentiment. We always do. Still at 66. We've been stuck at 66 for like 3 days as the market has been going up. This is worrisome. Okay. Or not. Okay. Like usually, like it would be going up 67, 68, 69. We'd be at extreme greed. We're not. We're still not at extreme greed. When it comes to market momentum, we are. But everywhere else, and especially here in the market, the breadth, we're dipping lower. We used to be at greed and now we're going into fear. It's as if the market is dropping in terms of market breadth. We'll get to that in the main event. Okay, but everywhere else, so put call option, extreme greed, people buying a lot of calls. And I just want to make it known that, guys, we are an OpX. Okay, tomorrow is options expiry for May. So maybe I can give you a bull case. Okay, this is a bear case. The put call options at extreme greed at super lows is very, very bad for the bulls. Like we should expect some kind of like reckoning. However, if all these options expire tomorrow, then it resets. People might be buying puts at that point. Who knows? Okay. So, yes, options are record highs, which makes me think it's going to go lower. Okay. We're going to go lower sometime. Okay. I don't know when there's going to be an exhaustion of buyers. Okay. So, we just don't know yet. It's not now. The market is telling you to stay strong, stay long. Okay. So, but the sentiment is getting there. Extreme greed, and it won't budge. It's like the odometer is stuck at 66. Okay, we'll see. Okay, so it's still cautious. Okay, we have to be cautious at these levels, especially when you have this breadth. And I will get to that. Don't worry. We also had the AAII investor sentiment survey come out, and this is telling you the exact same thing we've been saying before. The bulls are not really into it yet. A little bit, 39% bullish, 36.6% bearish. The average is 37.5 bulls, so they're barely at the average, and the bears are still lingering. Okay, so yes, longer term, I still think we are bullish. Especially if we go down, if we get some kind of correction, a big one, like down 30, 40 points here, like I don't know, 5%. These AAII bears are going to be back into the 40s, so it's going to be a buying opportunity when it first does crash down lower. But as of right now, like they're still lingering. Bears are still there, and we're not super optimistic yet in terms of overall sentiment. Okay, so there's still room. It's very strange to say. Okay? Very strange to say that there's still room for improvement. I would think at all-time highs, we would be at least 46 for like 3-4 weeks. Okay, and no, people are not liking this rally, which I guess bodes well in the longer term for us. Okay, we did have a macro print on Thursday. We always do. We have the initial jobless claims, and they came in at 211,000, higher than the 199, almost anemic levels we had a couple weeks ago, but still low and still not crazy. Even though you hear about all these tech layoffs, there's no real overall layoffs. Okay, the tech sector is getting hurt by AI apparently, but so far the macro is still holding up. Okay, so it looks crazy, but guys, the macro is still not rolling over yet, and the sentiment is still okay. The momentum is very, very extremely bullish, and I don't like the call buying. Okay, I want this market to go down. Okay, but it looks like it's not. Okay, so let's get to the main event. New highs. Should we have caution? Okay, so the first thing I want to say when it comes to this market going up to new highs is that you don't short it because it looks parabolic. That's just stupid. Okay, it looked parabolic here too. It should have, ripped through the highs and expecting it to go down. That day, maybe no. We just had one down day of like 0.65%. I don't even think we had a 1% down day. It's incredible. This whole time, not even a 1% down day. It's massively incredible. This worst down day was 0.65%. This this red candle, nothing in a month and a half. We're literally up 18.7% without a 1% drop in the market. I think that's a record. I don't even have to look. I'm pretty sure that's a record. In 1.5 months, you're up 18%. It's like, imagine you were down that like this. You were down 18.7% without going up. It would be devastating. Everybody would be super bearish. Nope. Now they're not that bullish. The opposite isn't that true. You still see a lot of bears lingering. Okay, so you have a massive 18.7% move with not a pullback. Okay, and from the highs, just from the breakout, we had a, what is it, 750? That's like a, is that a 10% move? 700? No, it's like a 7.5% move with not a pullback. That's unbelievable, breaking into new highs. So it just goes to show you that the strength of this bull market. But the real caution sign here that I would caution you guys is don't go short unless the market is giving you a reason to go short. It's not here. Okay, you have to see some kind of breakdown up, and then some kind of failure. Okay, so you could at least have some kind of reference to know what is your high. Like if it ever comes back above the high, you want to cover, because it's very, very dangerous to go short without a reference point, is what I'm trying to say. You need some kind of reference first if you want to go short. And I'm saying short temporarily, because I think any down move will be bought unless there's a real narrative change. Okay. So what really worries me is this. It worries me, but not yet. It's the fear in the stock price breadth. Okay. So I'm on the fence on this. Okay. The breadth doesn't necessarily have to be there for it to for the market to go up, but it doesn't. When you have there must be a point where there's such little breadth, which is one sector leading everybody, that you should be cautious. Okay, and we have a lot of indicators that show that the breadth is really bad. I'll take you guys here to stock charts. Okay, here I'm looking at the New York Stock Exchange McClellan oscillators. Okay, the McClellan oscillator is an old school measurement of breadth. Okay, and as you can see, it fluctuates just like an RSI between plus 100, minus 100, I guess. And anything over 70 is like extreme. Anything under 70, I guess, is also extreme. It goes between plus and minus 100. So you're like between plus 100 and minus 100, not between 0 and 100, okay? We're really, look at here. We're at minus 30. As the market has been going up, the breadth has been going down. And this is what it's telling you. But it generally coincides, like when the market is going down here, like if you see the breadth going down, this is during this move down here, and we were getting at extreme levels in the oscillators down to minus 80s. You want to buy. Okay, like this is just a 1 year time frame, but if you go to let's say a 5 year time frame, you see that anything under minus 70 is rebounded very much. So, and here we're at minus 30. Okay, so it's telling you that we're right in the middle of the breadth. Okay, if we go higher and we get this to minus 80, is it going to be a contrarian signal, or minus 70 where we have to buy the market as the market is going up? Because if it goes down and then up again, okay, which means that this would be literally telling you that there is such little breadth at highs and the market is going up every day that people are going to start buying every other company, and the breadth will start going up again. Okay, this is what it's telling you, if we get to these extreme levels. So it's very, very weird to see. Let's go back to the 1 year chart so you can see it better. It's very weird to see this dropping as the market's rising. Very, very weird. It almost never happens. Okay, so that's one measure. You can have bullish percent. It's another way of doing it. The bullish percent index measures point and graph. What do you call it? It's called. I brought it up for you guys. Point and figure charts from the old school days. Okay, a point and figure chart looks like this. It gives you X's and O's. X's is when the price goes up, and O's when the price goes down. It's an old school type of chart, and it's it measures breakouts, and it's the same thing. When you have an X, it's going up, and you put an O, it's going down. It doesn't take into account time, whereas these charts here, it's time. As time goes by, we measure it, whereas this point and figure charts, they don't. So what this bullish percent measures is how many companies are on the point and figure charts showing bullish trends, and here it's down to 50%. The 50 means it's half the companies showing bullish trends, and the rest are not. So it's like right in the middle. Okay, so it's not like it's extreme highs. Okay, this too has extreme levels. Okay, 3 years. Like if it ever goes up to the like above 70, you're getting very, very like overbought. And look, when it tanked down during this oil move down, the war moved down, we had the point and figure chart almost at like 12%. Okay, so that would be a great time to buy. It's always a contrarian indicator, and now we're at 50. So there's nothing really extreme yet in this market move, despite these moves higher. It's actually has been going down as the market has been going higher. It already reached the highs. So as it's been dropping, it's the same story. I mean, you get the same story whether it's any kind of old school oscillator. Okay, Nasdaq too, the Nasdaq McClellan oscillator, that too is going down. Same thing, 70 and minus 70. It's really at 15. And if the Nasdaq keeps going up and the breadth keeps going lower, we're going to get a buy signal in the Nasdaq as it's going higher. So it's very, very strange to see as the market is going up that these indicators are not at highs. Okay, so you're having a lot of this divergence type thing, which is very, very strange. Okay, very, very strange to see a high. This is why I'm slightly cautious, but it could be one of these melt up scenarios going forward. And remember, guys, what I wanted to say is don't go short right now as it's ripping because it looks bad. You have to have a reason to go short. I don't like shorting or having more short exposure when you have no reference point. Okay. Again, we mentioned the reference point. We need some kind of crack before you want to go short. Okay. Not yet. And maybe some kind of news has to come out that will change the narrative. Or maybe we still have amazing news on AI and then the market tanks. Something that is out of the ordinary has to appear before I'm willing to really put more shorts into the game. Remember, I do have some shorts, but we're using options, but they are done at a net credit. So even if the market goes up, I'm going to make money on those quote unquote shorts. Okay, they'll pay me if the market drops here. They pay the max when the market drops down to the support level. Okay, so yes, you should be cautious and the breadth is scary, but it's also telling you that it could be a turnaround signal. It could be like as the breadth keeps going lower and gets to minus 50 and 60 this is the Nasdaq McClellan oscillators or the bullish percent index, which these are just short-term indicators, okay? And they're telling you that we are not at extremes yet, okay? Just like this fear and greed index, the sub-index of breadth, which is like advanced decline line. It's the same thing with the advanced decline line, okay? If we go here to the advanced decline line, where is it here? The New York Stock Exchange advanced decline issues. Look, they're at, if you can see it here, it's at 528. It's almost like at zero. It's not at super highs. It's not at super lows. It's like slightly up at 520, whereas the lowest is 2,500 and the top is 2,500. Okay, so it's basically at the middle, slightly on the top. So it's in the middle. It's just telling you the same thing as everything else. Okay, that this advanced decline line stock price breadth is in fear. Like people are not a lot of meaning that only a few sectors are participating, which is generally a negative sign. And if it gets to extreme fear, guys, like we said, if it gets all the way to the extreme fear, that could be a buy signal if it's contrarian. This is why it's so weird to see a buy signal as the market is going at highs. All right. So I'm just putting it out there. New highs, but be cautious. Don't short it yet. Wait for a confirmation. And these are very, very unique times. This is a unique move, probably the only time it's ever happened and in history of these markets. And you should watch it, okay? Don't go short unless you get a sign. All right, later.